I used to really hate trading pullbacks. Every single time I enter the trade, it goes down, hits my stop loss, and then follows my initial analysis and hits the target profit level. Since then, I've been crafting a trading strategy that would perform well with pullbacks, and trust me, I definitely found it. It performs really well, and I'm excited to show you guys. So without further ado, Lions, let's get down to business. So for all the beginner traders, what is a pullback? Pullback is a correction in a trending market, also known as a retracement. During a uptrend, a pullback occurs when the price moves down before continuing its upwards trend. This downward movement forms a higher low relative to the previous price point. Vice versa, during a downtrend, a pullback occurs when the price moves up before continuing its downward trend. This upward movement forms a lower high relative to the previous price point. Entering a trade without identifying a pullback properly will give you a really bad risk to reward and ultimately make you even lose the trade that could have potentially been a very profitable one. So how do we actually identify pullbacks so this does not happen when we trade? So the very first thing you want to look at is support and resistance. What we're looking for is price levels that have already been broken and shown market interest with rejections. We can identify this by looking at the candlesticks themselves. Here's a clear example. This would be a bullish engulfing candlesticks, clear two candlesticks bouncing off the previous area of support. This would be a great candlestick as well because it's considered a lower shadow, indicating there is strong bullish momentum in the market, and as we can see, it did push towards the upside. We can see a similar scenario happened at the top. Upper shadow over here, bearish engulfing candlestick just here, pushing the market further down. And then of course, as we can see, there was a breakout towards the upside and a pullback towards the downside. You could have traded that pullback once the price was touching that area zone. You could have entered on the lower time frames, see what's going on there, enter the trade for a buy because the market has already made a new high of this area zone. Second thing I like to look at is moving averages. Just adding the three moving averages with values 20, 50 and 200 clearly shows us how the trade price is currently reacting, giving you a strong hint that the market price will likely continue with the overall market trend, which currently seems very bullish. You can also take this one step further by adding a nice little trend line, or even better, add a nice little channel to go along with your analysis. So as we can see, by adding this channel, we have clear idea on when the pullback is likely going to happen. It's also given us clear signs on when to enter the trade and when to close the trade. Now let's talk about areas of confluence, and trust me, this is where the pullback trading strategy really does shine. A strong confluence simply means we are adding all our trading tools together to get the best trading confirmation as possible for the trade we're about to take. The more clear confirmation signs we can get, the better the trade will be. So look at this, the market price is currently sitting above the 20 moving average. It's also bouncing off the previous area of support level just around here, and this is where the 50 moving averages, which is also a great dynamic support. Furthermore, what's even better, we waited for a candlestick close just over here and we got a lower shadow, meaning there is strong bullish pressure. The price is actually telling me this by this candlestick confirmation. We also have the channel, right? Let's not forget the channel. Over here, we are expecting a huge push towards the upside. We looked at 4 to 5 things already, but let's not forget for another trading indicator. I like using the RSI. So if we just type relative strength index and add it to our chart, we can see that the market price for the RSI indicator is above the 50 line, which means the current momentum in the trend is bullish rather than bearish, which is yet another trade confirmation. So if we open our trading position just around here, aiming for 160 pips, stop loss around 80 pips, a nice swing trade. We want to be covering our previous area of strong support level plus the 50 moving average. Our first take profit can be just to retest the previous top. If it manages to break it, push exhaustion, push, goes towards the upside for further pip gains. So our price action is beautiful, our market structure is done. Let's take a look at what happened this trade. We had a slight pullback and there we go. It would have been a beautiful trade. Okay, now sometimes you may have a situation where the market price manages to break your price channel and the two moving averages. Some traders could say that the market is now bearish and there is no chance that the market will continue moving up. However, they are dead wrong. If we take a look at the RSI, it's nearly oversold on the 4-hour time frame. Typically, this does show bearish momentum since it is trading below the 50 line. However, if we swap our time frames from the 4-hour to the daily time frame, it's a completely different story. On the daily time frame, we can clearly see that the RSI is trading above the 50 line, which shows bullish momentum. And what's even better, we're currently sitting on a strong area of support on the daily time frame. Look at this, the 20 moving average is around this area zone. And since this is the daily time frame rather than the 4-hour time frame, the higher time frame moving averages take priority. So we want to look at this time frame rather than the lower one. Another thing we see is clear rejections of the 20 moving average showing bullish momentum, right? We have a nice lower shadow, likely the continuation of the trend will continue. So again, coming back to the 4-hour, we now know that we are covering the 20 moving average on the daily. So we can safely assume that there is bullish pressure happening just around here, and we can enter the trade by ignoring the 4-hour moving averages. So this move over here is simply a lower time frame pullback in the higher time frame trend. Again, make sure your stop loss is big enough. As we can see, there was a sharp wick towards the downside, so we want to cover that, and there was no other breakout that kind of touched below this area zone. So this seems like a great stop loss to have, and for the take profit, you can vary it. Maybe first take profit near the moving averages. If it breaks, then you can full take profit or even retest the previous area top if you want. It really depends on your own risk management, but let's just see what will happen with the trade. And with all the knowledge and a bit of luck, we can see that the market did continue pushing towards the upside. Now, if we continue with this pullback trading strategy, sometimes there's going to be a situation where it breaks everything. All of the moving averages, all the previous area support, and even the 200 moving average, which is a solid area of support. What do we do then? So if we take a closer look, we can see that the previous market structure has now been broken. Clear M pattern over here could have potentially been a nice short position after it breaks the neckline, went towards the downside, or you could potentially even have a reversal trade just over here for potential push towards the upside. This is for advanced traders, but since we are trading pullbacks and high probability trade setups, what we want to do is wait. If this sharp move happens, we don't know where the market is likely gonna stop next. So the best thing we can do is wait for a retracement back to the previous area of sensitivity, which was around this area zone and where the 2 moving averages or 3 moving averages in this case are currently at. So if the market price continues shooting towards the upside, as we can see over here, we want to be now looking for a sell trading opportunity rather than a buy, because the moving averages will now react as the ceiling for the candlesticks. And if we take a look at the daily time frame, as we can see, a nice rejection of the 50 moving average. So a break, a pullback, what happens? Push, exhaustion, what's likely to happen? Another push towards the downside to likely retest the previous area zone. This seems like a great little price action. So what we want to do is cover all of the moving averages above. So 135 pips, we can enter this trade just over here. This would be a big swing trade, and as we can see, since everything is covered, we have strong confluence one more time, and let's see what happens with the trade. It continues moving towards the downside, struggles a little bit, passing through the 20 moving average because it is acting as a dynamic support level. So you could have potentially closed your trade for the first take profit just over here. Once it passes, you now know that likely bearish pressure will continue, and it did push towards the downside to retest the previous area of support level. So again, if you trade off major support and resistance levels with the overall market trend direction, you will never be unsure whether you should take a buy signal or a sell signal, because it will be clear as day, and some losses will happen, but overall you'll probably win more than you lose. And this is why this is the greatest pullback trading strategy there is. Trust me, try it out. I'm 100% confident it will work because I've been using it for over 10 years. So if you enjoyed this pullback trading strategy, I'm sure you will enjoy this video over here, where I actually show you how to enter and exit trades properly so you have great trading setups all the time. I wish you the best in your trading. Take care and goodbye.